And reeling under pressure, Mayuresh Joshi, fund manager of Angel Broking, joins in now. Mayuresh, a couple of earnings reaction that we are watching out for today. ITC and Pidilite. Pre-open trade is not looking very pleased in terms of the reaction to Pidilite. But in terms of your reaction, what you've made of those earnings, you want to take us through that?
Good morning, Samina. So clearly, I think as Piyush was mentioning, I think the numbers are soft. On the revenue front, I think they're still posting a reasonable amount in terms of how the estimates are panning out. But I think it's the margin pressures which are probably coming out to probably haunt their operating margins at this point of time. So how they're able to probably cope up in terms of the input cost inflation, how they're able to pass on these margins, because they still have a dominant position, specifically in the consumer and bazaar segment, where their products are still numero uno. But largely, I think what probably happens in terms of the overall landscape as far as the bottom line is concerned and the operating performance is concerned is what the street will be concerned about, particularly looking at valuations at which the stock trades at this point of time. So no doubt it is expensive. I think a slight miss in terms of numbers and the expectations thereof might actually lead off to some amount of profit booking out of the stock.
But Mayuresh, TVS Motors, I guess the street was disappointed with their earnings, but I mean this one's been on the sell side for I think 9 out of 12 months which are behind us. At what point does one start acquiring a TVS Motors?
No, so Samina, clearly I think how the numbers have panned out have been in line with estimates. The volume growth that you saw specifically in terms of their two-wheeler sales did hold out for them, and specifically even on the exports front, I think the number was very, very encouraging. So I think if you go by the trend on how the entire auto industry is facing, specifically the two-wheeler industry, and how numbers for TVS Motors are panning out, at least they are delivering up to the expectations that the street probably has. The second element obviously is the margin performance, and what you've probably seen in terms of price hikes being taken for input cost inflation that these companies are facing. I think it's a clear indication that they do want to protect the operating performance. And with that respect, again, I think the kind of expectations that one really has built in from the street, with a reasonable amount of volume growth, with sufficient protection on the margin front, should lead to reasonable amount of earnings. Now you can stack that up with valuations at this point of time and expectations that can come through in terms of new launches with the association that they've got and the models that can actually come through over the next few quarters. So again, I think valuations are on the higher side for TVS at this point of time. So I think it is going to be a wait and watch because what they probably come through in terms of model launches, how the numbers are panning out, will clearly define the re-rating in the stock on the upside, in my opinion. So yes, I think fairly valued in my opinion at this point of time.
Mayuresh, anything that you're picking up? I mean, you've got earnings from Ultratech later on in the day, so does Yes Bank. Both of those are reporting numbers, amongst a whole bunch of other mid-cap and broader market names. But on Ultratech and Yes Bank, what's the expectation today?
No, so Samina, I think if you go by how the expectations are getting laid out for cement companies in general, I think the volume growth should be quite reasonable because the kind of asset additions that they've done from JP should incrementally add to the volume growth. And how they're able to sweat the assets overall is also going to be a defining trend going forward. The second element, obviously, for the sector as a whole is that the realizations for regions, if you divide that in north, east, west, south, have more or less remained very, very constant. So the realization growth is going to be flat on a quarter-on-quarter basis. Now with crude prices coming off, I think the freight costs are going to reduce sequentially for these companies going ahead as well. And the petcoke prices have also corrected significantly. So I think the input costs are definitely going to drift lower, which means that the EBITDA per ton are going to improve. So yes, there is a sequential improvement that is probably expected to come through for cement companies, Ultratech included in that. Now, how do you stack valuations in terms of expectations that the street has for this volume-led utilization growth will clearly define the fortunes and the earnings of these companies. So yes, I think a reasonable set of numbers from Ultratech is something that I expect. For Yes Bank in particular, I think the growth specifically on the advances side should be very, very strong. Again, I think in terms of asset quality and the provision is expected to inch higher because that is what the trend the management is following at this point of time, and it's a very healthy trend that they're probably doing. The third element obviously is going to be the divergence report with RBI and what actually comes out of that, because that's going to be the more critical aspect in terms of the granularity of earnings that Yes Bank will report. From a valuation perspective, obviously it's not expensive at this point of time. But again, I think the capital raising plans, who probably comes on board to helm the affairs of this company going forward, I think these are critical elements that the street would probably take some cues from, if given any. So yes, I think reasonable set of numbers, but I think watch out for how the divergence pans out and the other factors as I pointed out. Yes.
Right, so that's the word coming from Mayuresh. But
Thanks for that, guys. We'll take a break on that note. The market itself is sideways. There's a slight negative bias. A couple of counters are breaking down, but the rest of the market is keeping itself together. We'll take a break.